With a little over a minute to go till that RBA decision, joining me now to take us through it is Craig James, Chief Economist at CommSec. Welcome, Craig.
Good afternoon.
Now, as I said, in less than a minute, just before we get the decision, what exactly are you expecting today?
We're expecting no change in interest rates. The economists generally across town not expecting any change. The Reserve Bank believes that we've got a gentle turning point happening in the economy at the moment, and we expect to see some of that language, in the statement today. But certainly sort of be looking very closely at the wording of the statement to see whether the Reserve Bank is now in pause mode or whether it still has interest rate cuts on its agenda.
Such a gentle turning point that many people haven't even noticed it's turning, I'd say. It's not unusual to have a Melbourne Cup Day cut. We have seen it before during the GFC, but maybe not today.
Yeah, maybe not today. It's been actually 7 Novembers. You'd have to go back 8 years to be able to find sort of a rate change on Melbourne Cup Day. So, as you mentioned, so you go back to the GFC, and we certainly did see significant changes, sort of back then. But for now, we've got the home market turning up, home prices rising, particularly in Sydney and Melbourne, and that's where the focus is. We've got the time; it's just elapsed. We have no change in interest rates. No change in interest rates today. That was very much the expectation. And we see the reaction in the dollar. Not too much reaction in the dollar. The Aussie dollar was at 68.85 before the announcement. Sort of no change, sort of there. The statement has just been released on the wires, just coming up now. We always go to the last paragraph to be able to see what, sort of is the Reserve Bank's view. The board will continue to monitor developments, including in the labour market, and is prepared to ease monetary policy further if needed to support sustainable growth in the economy, full employment and the achievement of the inflation target over time. So no real change in that final paragraph. The Reserve Bank still has the potential to cut interest rates in coming months, but it'll sit back, sort of now. On our belief is that the Reserve Bank will sit now for a couple of months, wait until perhaps February of next year, and see how the 3 interest rate cuts are working their way through the economy. Not just the interest rate cuts, but also the tax offset payments, the tax refunds working their way through the economy also.
Because until now, Craig, with the recent data this week showed those tax cuts weren't having much of an impact. So it will be interesting and they're probably lucky that we have the Christmas break over that time because the signs weren't good. I guess MyEFO will now be the main one the market's looking at for an indication.
Yes, the mid-year economic review, probably around about sort of early December, that we'll see that one come through and see what how the Federal Treasury is examining the situation at the moment, and see whether we get anything more from the government in terms of fiscal stimulus. Certainly the pressure has been brought to bear by the Reserve Bank on the government in recent months, suggesting that the rate cuts are basically done their dash. They're pretty much sort of low levels now, and it's not providing the same sort of stimulus in the economy as you would at higher interest rates. Now is the time for fiscal policy if there is the need for more stimulus to be applied in terms of the economy. So if anything, what we've seen since June and July of this year is that each interest rate cut has actually seen consumer confidence fall rather than rise. Fortunately, we didn't have a rate cut in the past week, and we saw consumer confidence up by 2.8%.
I know, it's confounding all the experts. Craig James, thank you very much for your time today.